There's chairs up here. I won't bite you. Come to the front. If you guys are standing, feel free to come up and sit in the front. I'll look at you straight in the eyes as I talk.
Okay. Thank you.
All right, cool. Okay. Everything's good. Everything's good. Oh shit. Okay. All right. Well, thank you all so much for coming. If I haven't spoke to you today, my name is Tom Nakata. I'm the co-founder and CEO of a startup called Qlay, Qlay. It's right there. And we're co-hosting this event with Kelvin from Translink Capital, who I'll have a panel with today. It's super nice out, so I'm happy that all of you guys decided to come out and talk with us. Before we jump into our panel, we'd like to quickly introduce myself as well as my co-founder, who is all the way in the back, as well as what we do as a company. So we're called Qlay, and we're essentially an AI recruiting company. A little bit about me. I have background in stats, and I was in strategy consulting before this. My co-founder in the back is a software engineer. He worked at Citi. He did PE firm. He did a lot of things. He's also a serial entrepreneur. And what we do as a business is we help startups find, hire, and pay vetted global engineers. And we do this because we also, as a startup, used to spend months on end on Upwork, on Fiverr, interviewing and talking and making people do coding tests and evaluating software engineers. And it took us a lot of time. So we decided to build an AI model that essentially solves this by sourcing and screening global software engineers on your behalf. This is good news for everybody, including us, because it shortens the time to hire, and it also saves you on hiring costs. So hiring costs would include obviously salaries, but benefits, stock options, and a lot of agency fees that you have to pay if you were to ask agencies to do this for you, and also other things as well. We're growing super fast. We beta launched last summer, but we've been growing big thanks to our customers and the referrals that we've been able to get from them. But enough of me and what I do. Maybe switch over to our guest today. Please give a round of applause to Kelvin.
I have some quick slides on Translink Capital, which is the firm I'm at, and also a few slides on AI and just a summary of what we're seeing. So we are a venture capital firm based in Palo Alto. We're actually just right down the street. We've been around for 17 years now on our fifth fund. And the thesis behind our fund is that the world is getting more globalized, or I shouldn't say that recently, maybe not so much. But Asia is a big market, right? Asia is 50% of the world's GDP. And so we have LPs that are corporates, mainly in Asia, companies like Hyundai, the car company, Korea Telecom, SK Telecom, Japan Airlines, and so forth. And we try to connect our portfolio companies to these corporates as either customers or channel partners. So that's kind of the thesis. Our fund invests in C to Series B, so that's the range. And then we do typically 5 to 7 million check sizes, although for seed we'll do less. And here's our team. So I'm based in Silicon Valley. Most of the investment team is there, but we have offices throughout the world, especially in Asia. So so this is kind of just an overview of how we like to think about the Gen AI space. So broadly speaking, there's 4 layers, right? So you have infrastructure, which is all your chips, your data centers, your networking, your storage. You have inference serving players as well. Above the infra stack is your research stack or model stack, which is your closed source guys, OpenAI, Anthropic. You have open source. And then tooling is everything you use to deploy AI models into production. And in this layer, we divide it into data focused, so things like vector databases, data labeling companies, and model focus, so fine tuning, RAG, evals, observability. And then above the tooling layer, you have the application layer, which we think from two angles. One is vertical and one is functional. So you can see some of the investments that we've made in each of these spaces. And then I have two slides here. One slide is just a review of what has happened in the past 12 months. A lot of things have changed in the AI space, and where our investment thesis is going forward. So from a kind of a historical lens, starting from the top, I think everyone, AI agents is the hot topic, I think, for the past year. I think 12 months ago, they were mostly kind of research, conceptual concepts. Now we're seeing frameworks like MCP that are actually enabling these AI agents to be adopted in mass scale. 12 months ago, cost was not a significant consideration. I think most companies just wanted to try out Gen AI, and inference cost was not a big criteria. I think that has become more important for decision makers going forward. The third point is that no Gen AI companies 12 months ago had crossed the $100 million revenue mark, besides OpenAI and Anthropic. Today, we have six application companies that have crossed 100 million. Cursor, 11 Labs, Glean, Midjourney, Perplexity, and Synthesia, in addition to the model companies. So things are ramping up quite fast. The fourth point is scaling laws. I think 12 months ago, everyone still believed in scaling laws, which is the more data that you put into the models, the better the models become. I think since then, people have shifted from believing into more of what we call test time compute. So basically asking the model to think for longer at inference time. And I believe this will continue to happen, especially as we run out of real-world data. Fifth point is US. I think everyone believed had the monopolistic position in Gen AI. I think DeepSeek and some of the other model players in China, like Alibaba, have kind of put a dent into that thesis. I think this is happening at the model layers, but it will happen at the hardware layer as well. Second to last point, OpenAI was a dominant innovator in this area. I think now we've seen significant pressure from others, especially Anthropic and xAI and Google. So the industry is becoming a lot more fragmented. And lastly, I think 12 months ago, the major bottleneck was still on chips. I think chips are still a bottleneck, especially access to really high quality NVIDIA chips. But I think going forward, the bottleneck is going to shift from chips to things like power and data center capacity. So that's just a quick review. And then my last slide is going to be on where we're going to focus on for the next 1 to 3 years. Just starting on the infra layer, I already talked about chips being chip level bottlenecks will give away to system level bottlenecks. So we're looking at the peripherals around the new data center. So for example, interconnects or cooling or power. Edge AI, I think, is quite interesting. I think it's still early for Edge AI, and that includes robotics, and that includes small language models. For the model layer, we talked about test time compute, so that's basically based on reinforcement learning. So we think the future of AI will probably center around reinforcement learning. So any startups innovating in that area is interesting to us. And then the next one is innovations outside of text, right? So we've been spending a lot of money on large language models, but we haven't really looked at things like world models and time series models and other things. On the tooling layer, two things. One is open source adoption, so anything that can support open source. And the second one is agent infrastructure. I think, again, still quite early on the agent infrastructure side. There's a lot of things to be figured out. So we think there's opportunities there. Lastly, application layer. One is AI for sciences. I think that's a big area that's yet to be explored. And then finally, we call it AI native vertical application companies, especially in kind of legacy industries. So that's just a quick overview of where we're looking at, areas we're spending time on, and what we've seen in the past 12 months. Yeah.
Okay, cool. Thanks, Kelvin. All right.
Sorry, that might be more than me.
No. Doing a sit over there.
Yeah, I'll just grab a cheat sheet.
Okay, well, thanks for that, Kelvin. Would love to jump into the Fireside chat. I will do that. Cool. All right. Are you ready for this, Kelvin?
Sure.
Do I
use this and this?
Yeah. Please use that mic. Okay. Great. Well, thank you all again so much for coming. I prepared some questions, so maybe I'll kick it off by asking. Actually, how many of you guys here today are like AI startup founders, non-AI startup founders? Just a show of hands. Okay, sounds good. Then maybe you guys might be curious about an investor's view on what kind of qualities you would look for in an AI startup that signal long-term defensibility and a breakout potential.
Yeah. So I think it really depends, going back to those slides I was showing on layers, depends on which layer you're building in, right? If you're building in the infra and model layer, you need deep technical expertise. You need to be really SOTA, right, state of the art. I think most companies here are probably building in the application layer, so maybe that's not as applicable. I think for application layer, you definitely, you need the basic technology. Like, I think that's table stakes. But beyond technology, I think it's things like your go-to-market strategy, your distribution channel. Not so different from non-AI companies, right? At the end of the day, I think AI companies, non-AI companies, the secret sauce of success is pretty much the same. I do think there are two things that we look for in AIs in particular. I think one is, again, similar to non-AI companies, a really big TAM. TAM is important. And the good thing about AI is that it's going to be a big TAM for a lot of industries, including recruiting as well, right? Yeah. And the second thing is, we ask ourselves the question, can this problem be solved previously without Gen AI? And if the answer is kind of or yes, then it's not exciting, because there's a lot of larger incumbents that can probably just tack on a product onto their existing product. But if it's a problem that's completely novel, then it's more exciting, because there's probably no incumbents doing it. So I'll give you an example. We invested in a company called Solve Intelligence. They use LLMs to write patents, generate novel patents. So that would have completely been impossible 2 years ago, right? And it's going to be hard for an incumbent to create something like that. So I think novelty is important.
That makes sense. And I filed for a patent before, and I had to write 70 pages worth of nonsense. So that absolutely makes a lot of sense. And maybe we'd love to touch a little on like how to distinguish hype from non-hype things. I feel like in a lot of AI startups, especially AI Asian startups, there's a lot of, I don't know if it's hype yet, but it's a lot of hype around, AI Asian SDRs, AI Asian that would, be your friend, or AI agent that would, do everything for you, or like an AI Asian teammate or something. And it's really hard to tell if it works or not. Mm-hmm. And so how do you distinguish, how do you navigate yourself through this hype and find out who are the best ones?
Yeah, so I think this kind of similar to your first question in terms of qualities and moats. So I think, again, depends on layers, right? If you're building in call it the foundational layer, you really have to be, you almost have to be believing in the hype, right? Because you have to believe in something that's like 3 or 4 years out there. So Yan LeCun in GTC, he said, Yan LeCun is a famous AI scientist. He said he's not interested in LLMs anymore, because LLMs been worked at for a long time. He's more interested in things like world models, physics models. And those are things that are 3 or 4 years out. So there's definitely, or even robotics models, right? So there's definitely hype there, but that hype is somewhat justified because it's a foundational technology. In the application layer, I think, yeah, how do you look beyond the hypes? I think there's a couple of things. One is, do they, for example, do they bring in proprietary data? I think data is going to be the next moat that it's kind of like similar to search. Internet search how is Google so good? Google is so good because they had a lot of data on you, so they can bring up the best search results. Similarly, I think it's going to happen in AI, probably more pervasive than search. So data, I think, is really important, and also just like creating a user experience that people like. Again, this is not an AI thing; it's just a startup thing, right? And if you can do both things well, and you can show traction, then I think you go beyond the hype. I think there's another way to think about it is. This is not our firm, but I saw this the other day in another firm, is you can bucket startups into two categories. It's like, number one, is it an obvious problem? And do they have, there's the two axes. One is it an obvious problem? And then is the right team to solve this problem, right? And you almost want to be in the bucket where it's the right team, but the problem is not obvious. Because if it's too obvious, there's too many startups in that category, like AI SDR, right? That's a good example, right? There's probably like 20 companies in that space. Yeah. And they're all growing pretty well, but then it's hard to know who's going to be the ultimate winner, right? Whereas maybe if you're AI SDR built for the insurance or the banking industry, you get a little bit more specific, but you're like the category leader in that space. So maybe the answer is verticalization. I don't know, but it's just something to think about.
Got it. Maybe shifting a little from building a business to like global talent. Mm-hmm. Obviously, I'm biased because I do global recruiting, but I feel like since we're all in Palo Alto, San Francisco area, a lot of the emphasis and a lot of media exposure goes to the startup in America and also Silicon Valley. But obviously, the companies like Mistral in France. There are, obviously DeepSeek, companies like DeepSeek was a very, very hot topic. From your perspective, will this become like another, everything's hot in San Francisco, or do you think things would be a little more distributed with global talent coming from everywhere, especially in the age of AI where the playing field is kind of leveled? Yeah. Well, what's your take on that?
I think we're still in the second to third innings. We're definitely not, in the mid innings. So because it's early, then it does, like San Francisco is still the center because that's where the innovation came from. That being said, I think like DeepSeek kind of opened everyone's eyes in terms of like, I think everyone was surprised, like, hey, these guys are able to develop an equivalent model, almost equivalent model, like a few months after 0.1 was released. And they're, the most cited paper was ResNet 2015. That was published by Microsoft Beijing. So you just look at that and you'd be like, okay, China's catching up, right? And I think the gap between the talent is going to shorten. I have a hypothesis. The reason that being is because we live in a very different world today where communication technology is so pervasive. Like I could just chat from someone, and I could Zoom with someone in Japan or China, and right. So that's different from like 30 years ago, where we didn't have that communication technology. And because of that, I think information dissemination happens much faster than before, and that's why you're seeing the gap narrow so quickly. I also think when we get into mid or late innings, then the technology isn't really a differentiator anymore, right? That doesn't become the moat. The moat is go-to-market distribution, all of that. So then you have a more level playing field. But I think for now, like San Francisco is this epicenter of AI. It will probably remain that way for the next, 12, 24 months. But I'm already seeing shifts. Like I'll give you a good example, Sakana, right? Sakana AI is a research model company we invested in. They're based in Tokyo. So they're recruiting talent from, a lot of talent from like University of Tokyo. But they're also getting a lot of talent from here and from Europe. And what they're saying is, hey, like we can offer you a package that's like maybe not as good as here, maybe 20%, 30% less, but you get to live in Tokyo and your living expenses are much smaller, right? And that attracts a lot of talent.
Got it. Allow me to go slightly off script,
sure,
Kelvin.
Yeah.
I think the idea of a moat came up a couple times already, basically because the infrastructure has been fairly commoditized. Everyone's using, OpenAI API. Everyone's building SDR or AI SDR companies. Everyone's building, AI coders. Everyone's kind of building a lot of different things. And it's easy to do that. And you mentioned that, okay, well, the moat now becomes not the AI level of the AI, but more of the go-to-market or the data itself or the distribution channel.
Yeah.
That makes sense.
Or workflow too.
Yeah, or workflow, or maybe an insanely smooth UI UX. I think it can come in a lot of shapes and forms.
Yeah.
But do you have like an example of a company that's doing this extremely well? Like a startup that's kind of established itself as like a very strong player by really leveraging or like building this moat.
I going back to my example on Solve, because I do think that's a great company. Like for example, they have their LLMs are not even fine-tuned. They're just doing RAG, right? Very simple RAG. But their workflow is so geared towards a patent attorney. And they've figured out the exact things that patent attorneys want. That it creates a massive adoption. The analogy is you, as an application AI application company, you don't want to be building the entire car, right? You want to be and you want to be building all the peripherals around the car. So whatever, the chassis, the interior, but you don't want to be building the engine. The engine is the LM model. You want to be able to swap out the engine every time a better engine comes, right? But the peripherals is the moat, not the engine. So I think all those things that you said matters a lot: workflow, data, UI, more than the LM itself or how you're deploying the LM.
Awesome. Maybe going back to the slide that you shared earlier about a lot of the corporate LPs that you have, big names all around the world, basically. Do you think those companies would help in terms of distribution? Do you think, they can have some level of positive impact on these startups? How do you think they can help the startup ecosystem as like a very, big corporate companies rather than like a nimble startup?
Yeah, I think distribution is the name of the game here, especially because things are moving so fast.
Yeah.
Those with existing distribution has a natural advantage over those that don't, right? And I think corporates are seeing that. Another fun fact is that last year, corporate funding comprised of 20% of all AI funding, and that used to be 5 to 10%, because Google is investing in Anthropic, Amazon is investing in Anthropic, Microsoft is investing in OpenAI. So it's good and bad for my industry. Good, bad in the sense that inflates valuation because these guys are not price sensitive, right? They'll pay for whatever, so that bumps everyone's valuations up. Good in the sense that there may be opportunities for M&A down the road. I think right now you're seeing not a lot of M&A. You're seeing M&A in the tooling, some of the tooling areas, like Weights and Biases got acquired by CoreWeave. Voyage AI, its embedding model company, got acquired. There's a few kind of tooling, inference optimization, but there hasn't been any in the application there. But I think that will probably happen because a lot of these incumbents will probably figure out it's cheaper to buy than build.
Yeah. I heard about OpenAI talking about potentially buying Codium, now Windsurf.
Oh yeah.
For
is that $3 billion, right?
$3 billion.
Yeah.
Which is obviously an insane valuation, but
it's probably like 100x already.
Yeah. But the whole idea is, would you rather spend time building your own, or would you rather just buy another company that's already built it for you and has like an organically built team?
That's right. Yeah, I think the Microsoft's probably doing the math. The math that they're doing is probably like, we have X hundred partnerships with large enterprise. Even if 10% of enterprise adopt Codium, that already returns the $3 billion, right?
Yeah. I guess then I saw in the slide earlier you had one of the companies that surpassed $100 million ARR mark as Cursor.
Yes.
what do you think would happen with this? Can Cursor survive as like a very independent player, or would Codium paired with OpenAI and the Microsoft partnership, like that kind of goes to the point you made about having a go-to-market or distribution channel. If Codium does get acquired by OpenAI, it would essentially be able to leverage this, corporate partnerships that Microsoft has. Does this give an unfair advantage compared to Cursor? Sorry, this is like a topic that I want to hear.
So I heard from someone that Cursor added more subscribers last quarter than OpenAI did. And they grew from they're the fastest growing company to $100 million ever in history. They grew from 0 to 100 in one year, and then they grew from 100 to 200 in 3 months. So if I was Cursor, I wouldn't be too worried, just based on the traction I have. That being said, they're raising, for example, Cursor is raising at 10 billion right now valuation. The higher you raise, you're also harder for someone to buy you, right? So because naturally you have a floor now, right? Your price is 10 billion. How many companies can afford 10 billion? So the more they decide that they're going to do it themselves, they probably actually naturally eliminate potential acquirers, suitors for the company.
Yeah.
But for them, I don't think they care. It's like, if I'm doubling, tripling every year, I'll get to $1 billion easy. Then I can IPO. They can probably IPO at like 500-600 million in revenue. That's probably the benchmark right now. So if they continue that way, they can probably IPO late 2026, 27.
Wow. What do you, just from your individual take, what do you think of that move? Because obviously raising at a higher valuation alienate potential buyers that at that point you're just essentially locking in and saying, okay, I'm just going to do it on my own.
Yeah. It's not just alienating buyers. It's also you put more pressure on yourself. Yeah. I think Cursor is fine because Cursor will grow into that valuation. But let's say you're a company X that you're raising at 5 billion and you have like 10 million revenue. Well, you better get to like 300 million or something like that next round, right? Or you're going to get a down round, and then that's going to be really ugly. So I think when founders think about what valuation they want, obviously the higher the valuation, the better. You take less dilution, but you also limit yourself in terms of M&A. You put more pressure on yourself to perform all of that, right? So I think there's a medium sweet spot.
Fair enough. Yeah. This is actually the last question that I have, and also a slightly nerdier topic about reinforcement learning.
Yep.
I think it's been a very hotly debated topic about the role that humans can have in training AI models, and I feel like ever since Scale AI built an entire industry with the whole data labeling as well, I feel like a lot of startups has followed that path of offering human data to large companies. Companies like Mercor are doing that right now. What do you think the role, and this also ties into what you said about data being the moat, right? You're essentially having humans create this data. What do you think in the next few years the role of human would be in training these AI models? Like, would we not need them?
Yeah.
Would we need them? Because, sorry, just one more thing about, there's been a recent study where the AI model that was trained on the rules of chess actually learned to be a better chess player than the AI model that learned off of a good chess player, like human chess players. So it almost seems like you don't really need humans to build better AI models.
I think, yes, I definitely think reinforcement learning, you can look at model in terms of model innovation in terms of relying on pre-training to now using reinforcement learning to do test time compute, right? So you can see from that the AI is basically self-reflecting, if that's a term. So there's definitely be more kind of AI RL instead of human RL, but I think you're always going to need human RL because human values change over time. Like what I can say 50 years ago about things, I probably can't say today, because our values have changed. So you always need humans to guide the RL in terms of, or guide the AI in terms of what is appropriate and what is not appropriate. You can make the argument that maybe the AI wouldn't know how to guide itself in the future, but I do think you need some grounding by humans, maybe less grounding. I think not that probably is not so as much in things like robotics.
Fair.
Because robotics, you move, your movement doesn't change over thousands of years, right? So probably once you train it and it can RL itself, then it's probably fine. But I think for things like text, that's like a lot more subjective. I think you do need a human guidance.
Awesome. All right. Well, I guess I'd like to open it up to the audience. If anyone has questions that they're curious about, we'd love to hand over the mic to you. And if does anybody have any questions about? Oh, okay. All right. I'm gonna go over there.
Question.
Okay.
Speaking of the applications, what do you think of the native experience of the AI models gonna be for the UI? Because you mentioned about on the application layer, there's also gonna be some innovations from with working with AI. But nowadays, actually, seems the most native interactions with AI is really just a chat.
Yeah.
And if everything all becomes like a chat, then what do you think of the future UI gonna look like with AI?
Let me repeat that question a little bit for everyone who didn't catch that. It was a question on the UI UX of AI models. Right now, it's a lot of chat, like ChatGPT basically. But the question is, how will the UI UX change?
I think you're right. I think it will get abstracted upwards to basically natural language. That's what's happening in coding, right? There's a really fascinating company called Lovable. I don't know if you guys know, but I was using it 2 weeks ago. So Lovable is a no-code, low-code app generator. You can just use natural language to tell it what to do, and it will create something for you. So 2 weeks ago, I was playing with the app because my wife, she's a kind of amateur baker, and we're like, okay, you make pretty good cakes. Let's try to sell it. And she's like, oh, I need to create a website. Too much work. I was like, oh, let's just use Lovable. So I just went to Lovable and I was like, create a website for me. My wife's an amateur baker. I want this type of category, blah blah blah, and it was able to just generate a website for me. So like that's probably going to be the experience. I think. That being said, I do think there's going to be. So you might have like a agent, like we call it like a orchestrator that's on top that will orchestrate different agents, right? Let's say I'm working, I need like someone to book a meeting with me or send an email, whatever. You'll have these different small agents. I think there is opportunities for people to work on these small agents, but eventually it's going to all orchestrate upwards to like a top layer. That's probably going to be just an assistant, AI assistant. Yeah, we haven't seen, no one has, but I think that's going to probably be owned by like a Meta or one of the big guys will probably own that layer. But the smaller agents probably can be owned by startups.
Cool. Yeah. Do you want to shout out?
Yeah, sure.
Or I could walk over there. Okay.
So I'm curious, how did the milestones change for investment rounds? Meaning, for instance, whereas we had before 1 million ARR for A, how's it now?
I'm going to repeat the question. The question is, how does a milestone change in the age of AI? Like, how much ARR should you have for each round?
I think again, depends on the layer, right? Some chip companies may end up raising hundreds of millions of dollars because it's that expensive to tape out a chip before they get 1 cent of revenue, right? So for those companies, we're not looking for ARR. For like your standard SaaS application companies, I think the bar, it depends on what type of round. If you're looking for a mega, there's been a lot of these mega A rounds and B rounds that like valuations are like insane. Then in those cases, it's not so much the absolute revenue versus the growth in revenue. I think that's more important. I think you need more revenue if you're like a prosumer business doing like B2C with high churn versus like you're focused on enterprise. That still has not changed. I think the overall bar in terms of revenue has gone up a little bit, probably for AI, if you're looking for those mega rounds.
Cool. Okay. Would you?
Yeah, I mean, maybe the related question, how would you see the future of consumer devices, especially mobile devices? Of course, mobile devices basically application-centric, but you know, I can see more voice-centric interface will be dominant. And I'm just wondering, ad is in your for mobile devices. So I just wonder how the ad is going to change in the mobile devices, and also how about ad market, because the Apple and Google basically making the money through their ad market. So I just wonder how those will be changing.
It's a great question.
Yeah,
The question was, how will AI change consumer devices, and how does that impact the dominance that Google and Apple has over these app marketplace?
I think what makes great AI is great memory. If you can capture your entire history of your experience, then you get a better assistant because they know all about you. So the question then becomes, how much of that can you capture through a phone medium versus another medium? I think a lot of it can be captured through phone. I use my phone a lot. But, you know, everyday meetings, right? Like, you're not going to take a phone out and start recording. So I do think there's opportunity for other modalities, especially, I think, voice and glasses. And I think that's like Meta and those are other ones are betting on. Yeah, I think a company that can kind of end-to-end capture your entire memory will be the winner. And I think phone is one modality, but there's other modalities.
I know that there's a startup called Rewind. That's like a pin
that's a
that
browser
you wear.
based, right? Rewind, it's a browser. It captures your actions on the browser.
Apparently they pivoted to a pin where you wear it like this and it captures everything you talk about during the day and it gives you like a summary of the day. But apparently in terms of regulation, when you're wearing this pin, you have to everyone you talk to, you have to be like, do you consent to being recorded by my Rewind pin? And I just thought it was extremely
I think
silly.
the pin idea has, the Humane came out, the Humane pin, right? Got sold to like on a fire sale to HP. Is it HP?
HP.
I don't know. I don't think the pin's the right one. I don't know what it is, but I don't think it's pin.
Okay. Yeah. So not pin is the answer. Oh, yeah. Do you want to? You can go ahead.
So you talked about the TAM, usually when you look for these startups to invest in. So TAM, I have been part of some discussions where I heard from the expert that TAM calculation has also shifted, because TAM is not just about the business opportunities, it's also about the replacing the manual way of working. That's going to end up, that's going to save a lot of money from the manpower, and that will get added to this TAM.
That's right.
Industry has this impact. So this becomes, for startup founder like me, it becomes very difficult. Like how do I arrive to that particular number, which can give me more conviction to give a better TAM in front of my investors.
How do you calculate it?
I totally agree. So SaaS market is like a 200-300 billion market, but services is like a 4 trillion market, right? I think recruiting is a good example. Like if you add up all the market for executive recruiters, headhunters, that's probably like 100 billion at least, right? Whereas recruiting software, maybe 1 to 2 billion, I don't know. But like obviously the market for services is a lot bigger than the market for software, and AI can replace a lot of services. So I believe I believe in your statement there. Sorry, what was the second question? Like how do you show TAM, or?
So it's just not only about the opportunity of the business.
Yeah.
But also about the replacement.
For sure.
Manual
Yeah, for sure. Like customer support is a great example, right? How many customer support agents and BPOs are there in the world? That might all get replaced by voice AI.
It's a new dimension getting unlocked.
Correct.
In each vertical, in each department and industry.
Yeah. Ironically, the time might go down though, right? Because now AI is so much more cost-effective and efficient So the 4 trillion services market may end up being like a 1 trillion AI market if you can efficiently do the work at much less cost, right? Then you're not paying the salaries. And then it's more existential question about what are we going to do with all the jobs that are going to get replaced.
Okay, great.
Cool.
Thank you all so much. We've been chatting a little bit for a little bit, so I'd like to close the fireside chat here. Just before I let everybody go, I just wanted to have one last announcement from our end. As I mentioned earlier before, we run a global AI recruiting company that's targeted especially software engineers around the world. And right now we're doing a campaign where if you book a demo with us in the next 48 hours, you will have 400 engineering hours for free. That's my LinkedIn right there. Please feel free to add me on LinkedIn, and we can take the chat from there if you're trying to get some development done as fast as possible. Cool. Thank you so much. Please give a round of applause to Kelvin. All right. Thank you. Thank you, Kelvin.
Yeah, no worries.
Much
Yeah.
appreciated.
I'll stick around for
that would be awesome if you could just stick around.
40 minutes or so.
Should we take a picture? I think we should take a picture.
You want to take a picture?
That's,
think